The Reserve Bank has revealed that its decision to raise interest rates again this month was touch and go. The minutes from November's board meeting showed that in the end, worries about inflation prompted the bank to move, even though it knew the big four banks would go even higher. Here's Andrew Robertson.
As Americain took the lead from So You Think in the Melbourne Cup, the Reserve Bank had given Australia something to think about, a surprise interest rate rise. Today we received a detailed explanation of why.
And what the RBA is doing is setting rates now for where inflation is likely to be in 12 to 18 months' time.
The minutes of the Reserve Bank Board's Melbourne Cup Day meeting reveal its concerns about inflation, even though at the moment inflation is well contained. With only a modest amount of spare capacity in the economy, a gradual upward trend in inflation remained likely over the medium term. If monetary policy was to be conducted in a forward-looking way, these developments meant there was a case for increasing interest rates at the current meeting.
I think inflation has been a concern for the RBA for a little while now. I think the combination of above-trend growth, this terms of trade shock and a tighter labour market is highlighting that inflation is heading higher over the medium term and that rates will ultimately need to go higher.
Since that Melbourne Cup Day rate rise, the big four banks have caused a furore by all raising their lending rates by more than 1/4 percentage point. The minutes reveal the Reserve Bank was expecting that. Spreads on longer-term bank debt had stabilised at levels that were significantly higher than before the crisis. Members noted that there was a possibility that banks would increase interest rates on loans by more than any move in the cash rate. But while home mortgage rates hit the headlines, banks have been hitting their business customers hard. A survey of 1,000 small businesses by management solutions provider MYOB has revealed 30% of them are facing severe financial pressure caused by rising rates.
While banks have increased the basis point spread over the RBA rate for mortgage holders by 110 points, business loans have gone up 225 points.
And while the government talks tough about reining in the banks, Tim Reid says since the election the small business community has become increasingly disillusioned with Canberra.
They would love leadership. They'd love someone to stand up and say, we understand business, we get what it's like, we appreciate you, we thank you for the contribution you make to the economy, and here are some things that we're going to do to make your life a little bit easier.
The release of the Reserve Bank Board minutes had little impact on financial markets, which are again focused on the Northern Hemisphere and the increasing likelihood that the government of Ireland will need to be bailed out by the European Union.
Ireland is making no application for the funding of the state because clearly we're pre-funded right up to the middle of next year.
Beyond that, though, may be a different story. National Australia Bank's chief economist Alan Oster believes countries like Ireland will eventually default on their debts, but he says the European Union will work very hard to make sure when it happens it's well managed.
And in 2 to 3 years' time, I think you're fundamentally going to say that these governments will need support. They'll arrange a orderly transition to whereby they essentially only pay 80 or 90 cents or whatever it is back in the dollar, and that will help them get around their problems. And I think the markets eventually will be right, but in the short term I think the Europeans are not prepared to let financial turmoil develop.
That could change, though, as early as tonight, where a crisis meeting of European Union finance ministers may force Ireland and Portugal as well to either come up with credible debt restructuring plans or accept bailouts.